2021 is getting close to its end, and it's looking like this year is going to end pretty rocky. We've got indexes selling off by 2% with the S&P 500, the NASDAQ selling off by 3.4%, and the tech sector is even worse, down 7% for the week, 11.5% for the month. In times like these, dividend portfolios really shine. Not only has my portfolio not gone down nearly as much as the indexes, I've also continued to receive dividend income the entire time. The dividend income stays the same no matter what the share price is, and when the share price goes down in times like these, the dividends have an even bigger compounding effect. November is one of my smaller months, and I get the majority of my dividends in the last month of the quarter, but this month was still record-breaking for me compared to the same month in other quarters. Before we jump into it, if you enjoyed the video, be sure to like and subscribe to the channel. It helps get these videos out to more people, and I really appreciate it. Also, let me know in the comments how much you made with dividends this month. And now, let's jump into the video. Starting off the month, we have JP Morgan. They officially paid their dividend on the 31st of October, but since that was on a weekend, it got sent to me in November. With the 16 shares that I own, I got $16. JPM has finally had the Fed's dividend increase restrictions lifted, and they're finally able to continue growing their dividend aggressively like they have in the past. Right now, I think JPM is still expensive. I'd like it to come down to at least the 130s before I start to increase my position anymore. But being the biggest bank in the US and with its diverse revenue streams, I really like having this as a core holding in my portfolio. On that same day that I received the money from JP Morgan, I also received a payment from Verizon. Since I had 19 shares at the time, I got $12.16. Verizon it's been awful. I'm down about 9% or about $100 on it. It has been one of the worst performers in my portfolio. If we look how it's performed over the last year, it's down 15.7%, while the stock market has just rallied. It has been pretty incredible how well the rest of the market is doing, and this has been doing the pretty much the exact opposite. And this isn't specific to just Verizon. If we look at other companies like AT&T is down 19% for the year, and T-Mobile is also down 14% for the year. All three of the big mobile carriers have just not been doing well this entire year. I haven't seen a clear reason for why, but my guess is the cost and issues with starting 5G development. I still think Verizon is trading at a good price, and I've been nibbling on this stock every now and then, but I don't want this to become too big a position since it's not going to be growing that much, but with a yield near 5%, it's hard to ignore. Next up was a payment from the monthly paying ETF, JEPI. I have 30 shares resulting in a payment of $10.98. JEPI is a covered call ETF, so the dividend income from it gets taxed as ordinary income, which doesn't have as good of a tax treatment as qualified dividends do. But the purpose of this ETF in my portfolio is purely to get more dividends while also slightly growing in capital appreciation. I expect this to perform somewhat like a bond where I shouldn't lose too much value during a downturn, but it still is going to be generating income throughout the entire time. I wouldn't recommend this for people to make a core position, especially if they have a really long time horizon, because of the unfavorable tax treatment of the dividends that gets paid out, plus the fact that this really isn't going to be growing that much. If we look over the past year, it's up 10%, which isn't bad. It's better than Verizon for sure. I'm not going to be increasing my position for those reasons because I have a pretty big position already. It's really a bit bigger than I think I should have. It's at like 4% of my portfolio. So I'm going to be avoiding adding to this probably for a very long time. Next, we have one of the few green stocks for the month that I have. We have Apple. I have 19 shares of Apple, so they sent me $4.18. Apple has had just fantastic performance this year. It's up 30.5% for the year. It's currently pretty expensive, and the market has been moving down lately, but Apple has actually been pretty resilient against this, just except for the last 2 days. It seems people have been treating this as more of a flight to safety compared to other big tech companies. However, news did come out on Thursday that they have been telling their suppliers that demand for the iPhone 13 has been lower than expected, and they might not get all the orders that they were expecting. This caused Apple to have a bit of a sell-off that next day, and I'm hoping that this just continues because I'd really like to increase my position more because I haven't bought in a long time, and I would love if I could get back down to these February and March prices. It'd be a dream. I would absolutely love it. Next, I got some money from the pharmaceutical giant AbbVie. I had 21 shares, which paid a whopping $27.30. AbbVie's future is a bit unclear since their biggest revenue driver, Humira, is about to lose patent protection in 2023. They have some other up-and-coming drugs like Rinvoq and Skyrizi, but they don't come close to Humira in terms of revenue yet. That risk is definitely a factor keeping their share price down and is one reason why I don't want to buy any more, even though I think it is trading about fair value right now. Another reason is that it's already a pretty decent size of my portfolio. It makes up about 5.8%. So I really don't want to make this too big of a position because it definitely does have risks associated with it. In the middle of the month, I received a payment from a lot of dividend investors' favorite REIT, Realty Income. I have 18 shares, resulting in a payment of $4.25. Realty Income recently completed their spinoff of Orion Office REIT, and I've been mulling over the idea of selling that spinoff. I'm planning on waiting to see what their dividend is going to be, but I'm not too keen on owning an office REIT because I don't really know how much that sector is going to be growing that much, especially now that working from home is such a popular option. But back to Realty Income, it has been a very stable REIT for many years. If it keeps dropping in price like it has been, it's down 7% over the last month. I'll be considering to start buying even more. As of right now, I do think there are better deals in other REITs like Vici. And last for the dividends, we have Caterpillar. This is a newer holding, so I only had one share, so I got the absolutely massive payment of $1.11. Caterpillar has really pulled back from its highs in the year, whereas it trading at about $240 and has now dropped to below $200. I mentioned a couple weeks ago that I was hoping for it to go back under 200, and it happened way sooner than I was expecting. Hopefully it stays down here or gets even cheaper so I can keep buying because I really do like this company. And with the infrastructure bill finally getting passed, there should be plenty of construction projects to keep their machines occupied for years to come. So totaling all of that up, I received $75.98 in the month of November. Compared to a similar month last quarter, which would be August, I received $61 there. So quarter over quarter, the income is up 23%. And if we look year over year, where we grew from 40 to 75, that's up 86%. And to make this even better, the majority of the dividends back here in November of last year came from AT&T, which I no longer hold, and that paid a huge yield. I also made some purchases this week, which have finally pushed my yearly dividend projection over 1,200, meaning that I now have crossed the line where I should be making an average of $100 a month in dividends. This is going to make the growth to $200 a month go way faster than it took for me to get to the first 100. The dividend snowball is really starting to pick up now, and I can't wait to see what these numbers are going to be next year. I think they're going to be pretty great. Looking ahead to what we have next month, we have payments from companies like Aflac, Southern Company, another payment from Jeppy, Johnson & Johnson, Microsoft, Walgreens, McDonald's, NextEra Energy, Realty Income, Coca-Cola, Home Depot, Lockheed Martin. And this is without a bunch of the big ETFs that I hold, and there's a ton of other companies that I haven't crossed the ex-dividend date for yet. So we got so many payments coming up for the month of December. It's going to be pretty awesome. I'm looking forward to seeing how much money this all racks up to be. And that's it for this week. Let me know down below what your November income looked like. Next month should be my biggest month yet, so be sure to subscribe so you don't miss it. Thanks again for watching, and I'll see you all next week. Bye.